Good morning, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Outlook for 12th September. So let's begin with the energy side of things. Oil prices rebounded on Friday amid supply disruption worries. But for the week, the oil prices remain under pressure on aggressive interest rate hikes and China's COVID curbs weighed on the demand outlook side of things. On the natural gas side, gas prices rebounded from the lows of the session and ended slightly on the higher side, but traders awaited further cues and awaited additional catalysts for the markets. Looking ahead, we see crude oil prices can continue to remain under pressure. This Monday, prices have started extremely weak again, down by almost over 1% in both the domestic and the international side. Concerns about weakening demand and US-led plan to cap Russia's oil weighed on sentiments. Additionally, prospects of demand sapping global economic slowdown also continue to pressure prices, and markets can possibly fall further. The main trigger for the oil markets will be again the news surrounding the G7 on the Russia cap of oil and gas prices. But inventory data could also have an impact this week coming from US side of things. So overall, we see markets remaining under pressure this week going forward. The range for the MCX September contract will be anywhere between 6,500 to 7,000 over the next couple of trading sessions. But overall, we see that 6,000 to 7,000 will be the key range for the oil prices over this week. On the gas side, we see the range between 625 to 650, and markets will await inventory side. Of course, moderate gas consumption due to slightly cooler weather in the US can support sentiments going forward. Moving to bullion, gold and silver prices rose on Friday, tracking the weakness of the dollar. Some short covering in the futures market heading into the weekend also lifted sentiments, but upside remained capped amid prospects of more interest rate hikes, more aggressive interest rate hikes by several central banks. Of course, looking ahead, we see the markets will be keenly awaiting the August US CPI inflation going forward this week, and markets can remain range bound ahead of that. However, why this is important is because if the inflation numbers remain elevated and inflation remains hot, then it gives Fed more leeway to hike aggressively in their upcoming September meeting. So this inflation number will be a very key trigger for the markets, and we see markets range bound ahead of that. Meanwhile, on the ETF side of things, we saw more outflows from the gold ETF fund in the US side of things. Of course, trading volumes on the US side of things has also reduced, suggesting that the current move higher is unlikely to be sustained. So we see more weakness for the gold and silver prices going forward. Range for the COMEX December futures contract still remains between 1685 to 1740, and while domestically we see continues the range remain between 50,000 to 50,800 on the upside of things in this week straight. On the base metals, copper and aluminum extended gains on Friday. Prices got a lift amid optimism about top consumer China, and the persistent smelter shutdowns kept supply in check. Also, we saw that Chinese CPI and PPI were moderately lower and also lifted sentiment. So we see further uptick in the copper and aluminum prices. China is shut today on account of Mid-Autumn Festival there, so markets volume will be very low, but downside can remain limited as Chinese credit growth should support metal demand, as the government in China will look ahead to step up their monetary and fiscal policy in the coming few months to support their economy, which is under really ravaged by the COVID-19 outbreaks and the shutdowns there. So overall, we see more uptick in the prices. Of course, some developments came in early this morning that Chile's Escondida mine workers agreed to suspend work stoppage and will meet their local regulators over this week to agree a deal. And if there is a deal agreement reached between the parties, we see the supply concern will ease, and this will cap any further upside going forward. So markets can remain range bound, but the key trigger will be any stimulus or fiscal stimulus by the Chinese authorities. Of course, the data front will also have moved the markets this week, especially the Chinese retail sales numbers and the IAP industrial production number this week will all be the key trigger for the markets. Finally, on the bonds and currencies, beginning with currencies, the rupee opened marginally weaker this Monday morning against the dollar. However, dollar's decline and further ease in crude oil prices can cap losses. The rupee opened at 679.62 versus 79.58. On Friday session, the rupee continued to move higher, tracking the broad decline in the dollar, and of course the oil prices also eased. Meanwhile, FX reserves data came in at 553, a sharp decline from the previous week, about $8 billion, suggesting that RBI has remained proactive in the market, and that has also aided sentiments and limited losses for our currency beyond 80 levels. So markets will be range bound this Monday's trade. We have the domestic August CPI number. There is a poll that the trend is likely to move higher. The August number will probably come at 6.9% versus 6.71 in the previous one, which could pressure RBI to hike interest rates more aggressively. So all eyes will be on that. So that's it from our side. Thank you for listening. Have a pleasant day ahead. Thank you.